Today, I am going to be sharing a simple strategy that you can be using to dish out a lot of pips trading good. Like always, catching the beginning of every impulsive move is a vital key to any trading. If you want to risk anytime, ensure you're risking correctly. My aim is to get you used and master how to catch the beginning of every impulsive move. Let me do a little illustration to show you what I mean. Now, anytime you spot something like this, higher high, higher low, higher high, higher low, higher high. Note, higher high, higher low, higher high, higher low, higher high, higher low. Now, notice something is going on here. This market, this is the beginning of this impulsive move. It pushed to this point, it retraced back, it pushed again, breaking this high, and it retraced back, and it pushed again, breaking this high. That when it comes to real chart, it's not gonna go like this smoothly, easy peasy. At times, it might just do a lot of funny moves, but what you're going to be looking at for is break of structures. Looking at this diagram, you already know that this is uptrend, is moving up. So what you're going to be looking at is every turning point. Now, market pushed from here to here, and it got to this level, and it turned, what we call retracement. It pushed up again, breaking this high. So it pushed up again, breaking this high. That's the first break. Okay. It pushed up again, retraced back, and it pushed up again, breaking this high the second time. You see? First, second, and then third. So on the third time, what happens? Instead of forming another break of structure to the upside, it does what? It takes this low out. So it breaks, instead of breaking to the up again, it breaks this low. So that's a huge difference. It now breaks this low. It means that something is about to happen. What does that tell you? It tells you that there's a shift. There's a shift. Something is going on. That does not mean change of character. A lot of people are oftentimes being confused and how to mark correct change of character, and that's why they keep repeating the same mistake and keep losing money. SMC traders will say higher high, higher low, higher high, and it takes this low out. It means change of character. That doesn't work when it comes to trading gold. In fact, whenever it does something like this, it breaks high and it breaks low, enter a buy straight up. You can scalp this buy straight up. You can buy it up to this high. So assuming if you're buying, of course you're scalping. Your buy should be up to this high. Because definitely, if it gets to this high, the next thing the market will do is that it's going to come to the next low. The next low. And most times it will even, at times it sweeps it, at times it just tap on it, and boom, it moves to the upside. And this is where your points of interest would be. The first retracement, the second retracement, then it turns back. So this would be your point of interest, where you're looking at to begin to risk. This is where you are looking at to catch that beginning of this impulsive move, which is going to happen. If you're risking here, you're wise. This oftentimes takes a lot of time because you have to have patience. Let markets play around. Don't forget, Forex trading is a probability game. It's actually a game. See it as a game. When you begin to see it as game, perhaps that's when you begin to make money. By the way, have you registered for my online intensive 6 weeks billionaire class that is coming? Don't be left out. Enrollment is ongoing. This is one of a kind. Remember, Your future self will thank you for this investment. It's actually an investment, but it will pay you later. It's better you master the skill, master the art of trading, rather than always waiting for signal or paying for signal. That is not how to do business. If you want to take trading to the next level, and perhaps if you're looking at becoming profitable as a forex trader, you must invest. You must put your time, your money, your effort. And I tell you, it's a guarantee. It will pay you back. It will. So, but put in the time, the energy, the money now. It will last for the period of just 6 weeks. And after that, you'll be cashing out massively and you'll be trading with confidence. No more second guessing, no more gambling, no more indicators. My goal is to make trading simple, as simple as possible, because God came through for me. He came through for me. So he opened my eyes to see a lot of things. I studied the chart and he gave me understanding to understand how these things work. I tell you, this pattern always play out when it comes to gold. Always. If not for anything, watch out for this pattern. Watch out for it. With this pattern alone, you will make tons of money, because of course when you're confident with your trading, you'll be willing to risk. That is the time to risk, and risk wisely. So what you're going to be doing is that you have to learn patience. For this to play out, it may take 1 or 2 days for it to play out. And of course, all through these 2 days, you're not going to be sleeping or gallivanting or playing. You have to monitor the chart to see when it gets to your point of interest. Or better still, you can use pending order. But the disadvantage with using pending order is that at times markets might fluctuate, and if you're going to use pending order, it will be advisable you do your calculation very, very well, because at times market can mess things up and it will even take you out and still go your way. Now, so you have to monitor the chart to know when it gets to your point of interest, and then you know how to risk. That is when, if you want to risk, you risk. This is a high probability setup. Anytime you see this setup on the forex market, grab it. And of course, in as much as you're risking, always apply proper risk management, because you know what? As a beginner, you're trading to protect your capital. You're not trading to make money. Of course, you'll be making money here and there. That is not the main goal. The main goal is for you to protect your capital and compound until your account grows. And in my next video, I'm going to teach you a simple way you're going to be compounded. Don't forget to hit the like button, share this video, and send in your comments. If you have any question, you do well to send it. Trading is very easy when you understand all the techniques that surround trading. For the fact that this always works out, you may not always see it all the time, because different strategy for different market conditions. So you have to know all these things so that anytime you see any one of them, you can easily identify and you'll take advantage of it. I have in my video that where I taught the simple way to trade SMC if you want to trade smart money concept, which is a very good concept for any beginner. It's so easy to understand. Let me show you a practical example of what I just showed you right now, this illustration. This is a perfect example. Like I told you, market is not going to go straight, zigzag, straight like that, so easy. But it is your constant practicing will make you to always identify setups whenever it's placed. This is first push-up, second push-up. This is not third push-up because it did not take this previous high out. So this is not considered. This is considered. This is the third push-up. This is considered. As soon as this happens, what you're going to do is to come and mark this place as your point of interest. This is the beginning of this impulsive move. And this is a perfect setup because there's a fair value gap around it. FVG around it. So this is a sweet setup. So you mark this fair value gap, and then you wait. This will take days to play out. So if I calculate so well, it may have taken like a day or 2 days. Let's check. See, it kept buying, kept buying. Don't worry, don't panic. Don't let FOMO get to you. That's fear of missing out, because you're not missing out. You know what you're doing. So you're waiting when the market will tap here. Okay, first day, it didn't tap. First day, it didn't tap. All of a sudden, a massive sell, and boom, it tapped our fair value gap. Remember, this is our fair value gap, FVG. So it tapped on it. So it tapped on it the first time, and then it later came back to your point of interest, and boom, you enter the market. See how massively the market moved. And this is where you start adding positions. This is another impulsive move. You add positions here, you add another one here, you add another one here. Sweet trade. Keep moving, it's still breaking structure to the upside, and you're still holding. You add another one here, and look at that perfect example again. It happened here. It took the high out and it took the low out. You enter, boom. So the moment he breaks this, because this is the second time this happened, you zoom off this trade. The moment he breaks this, you come out of the trade. And of course, register for the online Bologna class. Duration will be for 6 weeks, and you become good. Your future self will thank you. Bye for now.